Elaine, I wanted to get to you because it looks like you managed $2.5 billion at Gen Trust. How are you guys positioned right now after this strong run and with a lot of the good news in the market?
Yes, absolutely. So we continue to be overweight real assets. We think kind of the biggest, risk to what Mike was just saying, that maybe people are not taking into consideration is the potential of a rise in inflation, right? The balance of risk in terms of inflation have shifted, right? Instead of globalization, we have a push for deglobalization. How much more productivity can we get from automation versus, prices going up in things like, for example, digital services, which we're seeing now. Then you have like central banks telling us that they're going to let inflation rise. And you have a huge amount of debt that all the countries have had to take to help with, the COVID pandemic. So for us, it's been really key to position portfolios to be able to withstand inflation. So we're overweight real assets. We bought tips and gold back in March. We continue with that positioning. And also back then when we rebalanced portfolios, we put an overweight of technology and we continue to that. We would love to add to base metals in a backup, but right now we're kind of standing guard.
Josh, what do you think of that positioning for inflation?
If you say we're not going to have just where we are right now on CPI, it's either got to be lower or higher. Obviously, I would say higher. I think it's the good kind of inflation. I think it's the kind where employers go to their employees and demand to be paid more. We just saw one of the most interesting results of the election that we just saw was in red states where they went for Trump, they also went for statewide minimum wage hikes. And you don't see that very often. These aren't socialists. These are just people saying, guy, I can't live this way. So I think a combination of companies like Amazon and Walmart and Target doing more for their employees, plus I think 12 or 13 individual states this year raising their minimum wage after several other states have already been doing that. I think you will get that type of inflation. I don't know that there's a great read-through from that to like base metals. I could be wrong. For me, I want to be long stocks. I want to be long REITs. Historically, those are the best long-term hedge against inflation, provided things don't get totally out of control, which is certainly not what I expect.
Elena, what about small caps? That continues to be where a lot of the action is, and they outperform on days where technology does well and also on flip side days where cyclicals and value do well. Do you think it's overdone, or are you adding to exposure there?
So we had added back in March a little bit of that tilt just because the index didn't have it, and we thought they would come back, as we got the recovery on COVID. We're not adding to it right now. I think it's just, the general theme of recovery trades, right? I mean, if you look at the Russell, it's been amazing the turnaround that it's had, but it got really beaten up and hit when COVID hit. I mean, with all the reasoning behind it, and now it's recovering. So what we have done is look at other sectors of the economy that we also think that would, recover and outperform, such as hospitality and leisure, for example, and added that to portfolios, just kind of getting them ready for, post-COVID recovery.
Shepard Smith here. Thanks for watching CNBC on YouTube.